Kia ora, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news that global factories are no longer expanding as fast as we head into the last 2 months of 2022. But first, there was another sizable fall in dairy prices at the auction earlier today. Overall prices fell another 3.9% in US dollar terms, and on a rising Kiwi dollar, prices were down a substantial 6.6% in New Zealand dollar terms. These falls are mounting up now. Very weak Chinese demand, including from their food service industry, is kneecapping these commodities. Skim milk powder was down 8.5%, whole milk powder was down 3.4%. All this is happening despite falling global milk production. Overall prices are now back to levels we last had in January 2021, with the bull run now well faded, and we're down 30% from the peak in March 2022. No one is talking about a commodity supercycle anymore. In fact, farm gate payout forecasts will undoubtedly start to be trimmed now for the upcoming season. Meanwhile, American retail sales are still holding up, but American factories are not expanding as fast as they once were. In fact, now barely at all. Their September JOLTS report shows job openings increased, hires edged down, and total separations decreased. If these employment conditions extended into October, the upcoming non-farm payrolls report for October will be on the upside of the currently expected 200,000 employment gain. And American construction spending unexpectedly rebounded in September amid a surge in investment in non-residential structures that offset a further decline in house building. In Japan, their market PMI fell away too, but only a minor expansion there. The private Kaizen factory PMI in China wasn't as negative as the official one, but it was already contracting in September and stayed contracting in October. In contrast, in India, their factory expansion rolls on at a good pace. In Australia, the RBA, who review their cash rate target monthly, added another 25 basis points to their policy rate, taking it to 2.85%. They deemed this an adequate response to their inflation pressures, which they now see peaking at 8%. The US Treasury 10-year yield starts today unchanged at 4.05%, and the price of gold will open today at $1,645 an ounce. This is up $9 from this time yesterday. And oil prices start today up $3.50, at just on $89 a barrel in the US, while the international Brent price is now at $90.50 a barrel. And the Kiwi dollar will open today at 58.4 US cents, an up a quarter cent since this time yesterday, and a 6-week high. Against the Australian dollar, we're a half a cent firmer at 91.5 Australian cents. Against the euro, almost another half a cent firmer as well at 59.2 euro cents. That all means our trade-weighted index starts today at 69.1 and 40 basis points higher, and our highest since mid-September. You've got more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.